Hello traders, Kevin here from Intelligent Trading Academy, and welcome to today's video lesson. Today we're going to look at the differences between fundamental and technical analysis and how we as traders can utilize them in the financial markets. Let's break down fundamental analysis first. Fundamental analysis is also known as top-down analysis, which uses qualitative and quantitative factors within the sectors. Now, there are two sectors within fundamental analysis. The first is macroeconomics. Macroeconomics focuses on the overall economic picture and conditions within the industry. So we'll look at the conditions regionally, nationally, and as well as global economies. And it'll include the studies of unemployment rates, GDP, national income, fiscal policy, monetary policy, as well as inflation and deflation. Now, the second sector is microeconomics. Microeconomics focuses on companies and usually studies the economic tendencies and the behavior of individuals and firms. So it includes a study of demand, supply and equilibrium, the production theory, costs of production, labor economics, as well as corporate governance, so the management and the team inside. Fundamentals are commonly used in several different asset classes: equities, FX, debt, so bonds, T-notes, T-bills, etc., to pretty much analyse market conditions and look at longer term outlooks. If you look at constituents such as equities, you will find that financial analysts will be conducted on different factors such as the balance sheet, corporate governance. You're then looking at ratios such as PEG ratios, earnings per share, EBITDA, debt to equity ratio, and the list does go on. It can be in some cases very daunting and quite complex, but like all things, it takes time to fully understand the many different metrics for evaluation and what could potentially work best in your investment or trading style. The pros of using fundamental analysis: a lot of longer term investors utilize fundamental analysis for value investing. They'll potentially look at the ratios and work out different calculations and metrics to understand whether the asset class or security is overpriced or underpriced, and look to obviously utilize and take advantage of such a scenario. Trend followers, longer term trend followers who are looking to ride the trend, such as herd investors, etc., will be looking to again establish on a calculations based formula or a chart based formula, i.e. patterns, trend following through breakouts, moving averages, whether the price looks undervalued, to look to buy, i.e. go long. It can also be very good to develop an internal understanding or a solid understanding of how to read a company balance sheet, and it gives you a greater insight into the company as well as the management team who operate. There are cons with fundamental analysis, or what we should say weaknesses of fundamental analysis. It can be very time consuming. Investors are unable to quickly determine a position as they need to work out all of the different valuation metrics. It can also be quite subjective, and you will find analyst bias. So in terms of corporate brokers, you will very rarely see them issue a sell note on a company that is paying their corporate broking fees. And to revert back in terms of time consuming, before software development in the 1990s, traders and market makers were handed financial reports which could consist of over 100 pages. Now imagine having to sift through the information just to create a price or find a potential level that you're interested in investing in. It is a lot easier with technical analysis. However, it does also come with its pros and cons. So technical analysis, there is a lot of responsibility in the terms of it is an art or a science, and many have considered technical analysis as a holy grail. However, in my opinion, the holy grail comes down to risk management, money management, and capital protection, not necessarily the trading strategy. But without further ado, technical analysis is the art or science of forecasting potential price movements based on the visual examination of historical price movements. There are three main principles of technical analysis, which are price discounts everything, price moves in trends, and history tends to repeat itself, usually. Technical analysis can be known as either top-down or bottoms-up. Again, it's always subject to your approach, your technique, and your trading style. But what we do is we utilize and use charts as well as financial data to seek and identify price patterns and market trends in the different asset classes and securities that we invest and trade into, in an attempt to exploit these patterns. Now, technical analysis can be very overwhelming. I would always suggest not trying to overcomplicate something that can be made very easy. So if we actually take a look at the Euro USD chart, I've just plotted several different momentum indicators as well as trend lines and support and resistance levels, as well as descending trend lines and Ichimoku cloud, and the general candlestick price action. So here we've got candlestick price action, which are the red and green bars. This here with the blue haze and the green is an Ichimoku. I've also drawn and plotted on an ascending trend line and a descending trend line just to show you a couple of potential important levels, and a resistance line roughly plotted on the chart. And then I've put a few momentum indicators down here, so I've put the MACD, the stochastic, and the RSI. Now, it's an extremely messy chart in my opinion, and it's extremely potentially complex. Certain conflicting indicators are bouncing around which could potentially allow you to miss views or not take advantage of potential price movements. If you are new to charting, you will always find that technical analysis can be quite overwhelming, with many traditional questions that we get asked. Where do we start? How do I know what indicators to use? How many indicators should we use, or even how little? Because it can be overwhelming and there are several hundred indicators for traders to look through or work with, we've always found that less is more. I'd suggest never to overcomplicate something, again, that can be made very simple. The beauty of technical analysis is, again, the versatility and the options. Technical analysis can be traded on any time frame across any asset class, such as FX, stocks, commodities, fixed income, indices, even cryptocurrencies, which is the latest asset class. And you can trade asset classes, you can trade your technical analysis on the 1 minute time frame up to the monthly time frame. Another note to bear in mind is, again, in our own opinion, technical analysis and price action can hold greater weighting on the longer time frames. So we would always say work with daily time frames or more, but that again is our own personal preference. Whilst technical analysis sounds fairly simple, it's by no means easy. Like many areas, success requires study, commitment, dedication, as well as countless hours of screen time. So the more screen time you put in, the better your process. But technical analysis can use many different variables, such as market structure like support and resistance, trend lines, moving averages, price action, so candlestick patterns, which you saw on the previous chart, as well as oscillators like the MACD, RSI or RVI, which are again plotted on the very messy Euro USD chart. Fibonacci ratios, suggesting pullbacks or potential extensions. Elliott wave is also good within trend following. I find many traders utilize Elliott wave. Harmonics and patterns. Price patterns, in my opinion, again, are very substantial in terms of their weighting, such as equidistant price channels, flags, pennants, head and shoulders. All of the above are just a few of what, as traders, we get to plot on our chart, and what we get to really utilize. Here's a chart of cable, so GBP USD. This is how I pretty much trade. So I utilize the moving averages. The golden one here is the 200-day exponential moving average. The reason I have the 200-day exponential moving average on my chart, institutionally, it's a very important level. We also utilize trend line, so this is a descending trend line here as well as an ascending trend line, and we also utilize support and resistance levels. So here is a resistance level, here is the support, here is a previous resistance level as well. So in our opinion, cleaner, clearer charts allow us to make concise, effective trading decisions a lot quicker than fundamentals. But before taking a position, we will always utilize macroeconomic data, and we will always look at a financial calendar to establish what news and what important data is coming out. So before we potentially took a short position on this break and this break to get short, we would look to see if there's any sterling or USD data. So Britain releasing Bank of England minutes, CPI data, RPI data, even the USD or US releasing non-farm payrolls, which is very important on the first Friday of every month. The pros of technical analysis. So if we go back to the PowerPoint, the pros of technical analysis are that it does allow for advanced entry techniques. It allows us for the ability to identify support and resistance levels, so key market structure to identify potential market direction, as well as understanding and knowing where the price has been, where the price is right now, and potentially utilizing our visual and technical analysis where the price potentially can be based on probabilities. Now, many traders like ourselves will utilize both fundamentals and technical analysis. We put a lot more responsibility on technical analysis. I would say 90% is devoted to technical analysis, with 10% weighting going on fundamentals. And you'll find that many traders or investors find it a lot easier to read a chart than reading a company balance sheet. But in my opinion, again, get used to reading company balance sheets. It's good to understand what's going on within a company. And there are downsides with technical analysis. It always comes down to subjectivity in terms of drawing trend lines or visual patterns like the ones we see on the screen at the moment, as well as it being quite discretionary. I'll find analytical bias. I'll be very bullish of something or bearish of something, and I might find someone else is on the other side of my trade. But that again is one of the beauties of the financial markets. It is a zero-sum game, and it's all up for interpretation. Now, in summary, technical analysis is a skill that will always improve with experience and study. Always be a student and continue to learn, be it utilizing fundamental analysis or technical analysis, but try to fuse them together. You should see an improvement in the process of your trading, which hopefully on the back end should create a more consistently profitable trader. Overall, fundamental and technical analysis are both extremely powerful techniques that can be used in any trader's armory. We again personally fuse the analysis together to try and give us a greater overall picture. That's all for now. If you've enjoyed the video, please like and share, and don't forget to subscribe to our channels for more trading videos, as well as notifications on our new posts. Follow us on Twitter for intraday market action and news, as well as updates and potential trade ideas, and on Facebook too. Thank you very much for listening, and we look forward to any questions or comments you may have and interacting with you further.